Good morning, everyone. How you doing? Happy Monday. Happy Monday. How's everybody doing? Hope you all had a good weekend. And the fun and games continue in the overnight session. Let's go take a look and see what's cracking here. So, in our trading room at Trading Syndicate, I posted a graph. And it showed the practical use of market profile. So we had overnight inventory was long. We had distribution. The point of control, which means the volume shifted from here up, which which basically means we had good sales over the previous day high. Okay, so we used short covering to hold the market high, sell that position, and now we dropped it back down. So the trade, if you were up, the trade would have been to wait for the market to re-enter under Friday's high, short it, put your stop above, and your first target would be the close. If you're still short and you're holding, your second target's going to be around 71.82. Okay? Most of the trades that we take are based on inventory corrections. Actually, let me rephrase that. All of the trades that we take are based on the corrections of inventory, really. That's why markets move. Inventory gets too long or too short, and it will move the market one way or the other, right? In the old days, you'd get a big institutional bid, and the market would hold and move higher, bid, hold, and move higher. It's kind of an obvious way of doing things, so now things have gotten a bit more sneaky. Large institutions have their own algorithms which basically go and pick order flow, so it's a lot harder to figure that out. Most of these markets, now I have been saying since January that these markets were going to be speculative in nature, and that's exactly what we're getting. So you get, there was short covering here in Friday singles up. So this is accumulation. Sorry, it still sounds like I got some cotton balls in my mouth. I'm having a hell of a time getting rid of this cold, so apologies for that. So you have accumulation, distribution, sorry, distribution, and then sale, right? Products put on sale. Right now the bid's around 71.86. Let's see if that holds. Now, how do we trade this? After the inventory correction, you can see it's kind of balancing, going sideways here. Let's go take a look. Very common market profile trade, excuse me, is to wait for this inventory to pile up, short it back down, and you put your stop at the high of H right there. And this is where you'd be covering somewhere in the middle of the overnight profile. Okay. Hey Marcus. Hey Terrence, what's going on? Long time no see. Let's go take a look at You can see that sideways motion. 1 minute candle charts will tell you a lot. There's your distribution. And we're accumulating again here. So what we're looking for now is when London opens in 10 minutes, do those lows hold? That's what you're basically looking for. Okay. Short covering is not accumulation. That's a great question. Short covering, because what happens? When you short something, you sell something you don't own. When you sell something you don't own, you got to buy it back to close the trade. So when you close the trade, you're net zero. There's no position. So short covering will hold up a market momentarily if there's enough of it. But generally what happens is after short covering is done, a market will drop because there's nobody actually accumulating. But if you can short cover and hold that short cover for a long period of time, it will create price stability. And once you have price stability, longs will come, right? So if the shorts can hold a market up for enough time, it'll create stability, which will bring in long buyers. So that's what, if you're looking, if you were short, say you were short 71, 98, 99, you cover some at 96, 95. And then your ultimate target would be these single prints because that's where the bid is going to be. You can see this is front running that target, right? Shorts are always the first to buy. So the sequence is when a market liquidates, the first people to buy are the shorts, then wholesale longs, then us. And then if enough people short in these areas and they go to cover, that's when you get that big move back up. There's always a sequence in liquidation. I haven't looked at NQ. Sorry. I haven't looked at NQ in a long time. Not much you can tell from that. I don't have a TPO chart for it, and I haven't really been following it much. So I have some levels, but no way. I haven't done any analysis on it at all. So I'll have to do those charts. I've been sick, so I just haven't bothered with NQ. Most of the traders I know trade ES. I mean, especially if you're not consistently profitable, you should stick to ES. NQ is a very difficult, thin market to trade. It's a pain in the ass. I know a lot of people are addicted to the price action, but I spend, ES is really the only thing I trade. Hope to get back to trading a bit this week. It'll be nice. Let's see what's going on here. And once again, you've caught us at a boring time. See what happens in 6 minutes when the market opens. Let's see. What I'm curious about now is, can we spend enough time between 86 and 92 to move this point of control down? See, it's around 2,000 contracts up here. You want to see if we can move it down into this 9088 area. That'll show this is distribution, back to accumulation, back to distribution again. Or do we actually go down and hit 71.82? Let's see what happens. Now we do have some people in our room that do trade NQ, but they've taken a beating learning how to trade it. I have seen a market like this before. Well, before I started trading ES, it was in penny stocks, and the ones that I was manipulating. But if you go back to COVID, this market from 2020 to 2022, same thing. And there's a reason. There's a reason why the market trades the way it does. There's a reason. There's a structural reason. If you look at the way the market is built and you look at who owns the positions, you look at the money they have and you look at their investment timeline, it makes perfect sense. See, a lot of people say, oh, it's too high, it's got to come back down, it's blah, 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 blah. But they actually have no idea what they're talking about. Because I've taken 200 companies public, I've actually structured transactions. So, fancy way of saying it is I've worked on the investment banking side of it, even though I wasn't an investment banker. And what most people don't realize, and when I get my voice back, I'll be doing a course on investment. How to invest for the long term with practical information, not all this crap that people look at. Coming from somebody who's actually built companies, taken them public, and sold the stock. The way you structure a company and where you place the stock will affect the way it trades. So has anybody ever looked at the market and seen, gee, Apple, Microsoft, Nvidia, Tesla, blah, blah, blah? Have any of you ever looked at those stocks and wondered, who owns these stocks? What is their agenda? You guys ever think about things like that? Probably not. So you take a look at a company like BlackRock. They've got, what, $14 trillion under management? They own 1 billion shares of Apple. Do you think they bought that to trade it? Or do you think they bought that as an investment? Right? Is it an investment or is it a trade? So BlackRock, they own 1 billion shares of Apple. They're holding it for 30, 40 years. Look at how much stock is available in Apple. It's what, 15 billion shares? How much of that 15 billion shares actually trades? Less than 1%. Any light bulbs going off, you guys? Yes? No? In the room, there's yes, yeah. Yeah. So if you own stock for 30 years, and you own it and you paid cash for it. You're not subject to margin calls. So COVID, last year's, Terminator 2 Judgment Day or whatever the hell that bullshit was, when he tanked the market 1,000 points. Those people who own that stock don't sell it. They don't have to sell it. In fact, they might buy more and add to their positions. You have to look at where the stock is placed and the people who own it. If you understand who owns the stock and what their agenda is, here comes London opening. Let's see if we can get any lower. I'm looking for the 83, 82 level. Let's see what happens. This will tell us where the bid is. Does that make sense, Tux? And that's why a lot of people lose their ass shorting. Because they don't understand that if there is no seller, there is no short. See, we just looked underneath 71.86 half. Came back up. So what does that mean? In practical terms, it means that no one had to sell under 86. Just for just a brief moment. Shorting in this market is a fool's game, right? It's a fool's game. Hit and run and shorts are okay. I mean, shorting, like the trade that we had here, short, 7,200, stop 7,201, cover 71.95. That's not a bad trade. There is nothing wrong with hit and run shorting. But getting into this mentality of being a perma bear in one of the largest bull markets the world has ever seen is probably the dumbest thing you can do, right? I still remember when Tesla broke 350, and I was telling guys, look, if this thing breaks 350, it's going to 500. If it goes from 5, if it hits 5, it'll go to 7. If it goes to 7, it's a hop, skip, and a jump to 1,000. Do not short it. I put out a warning, right? We've been in a bull run how many years now, right? It just never stops. Here's why. You got low interest rates. You have money management firms that manage trillions of dollars. Okay? And they take down positions and hold them for decades. So they're not selling them. They're paid for in cash. Here's another thing. You guys need to educate yourselves. Rich people don't sell stock. They take loans out against it. People take loans against their stock positions, high net worth individuals. They take loans against their positions. The positions keep getting marked up, and they get to write off the interest on those loans against their taxes, so they don't incur capital gains. Smart money concepts, my friends. And everybody else thinks that gravity is going to take effect. There's no such thing in gravity. It's who owns the supply. If you look at a stock, right? Since it's slow, we're just sitting here watching. There's no trade. Maybe along at 71.93 to 96 or 7, but for now, nothing. What I'm saying is it's just going to go back and forth here. We're cleaning out the upper inventory over 7,200 here under 71.80 in the 71.89s. Say you have a company, right? And it's got 10 million shares in the float. Just a nice round, even number. And out of those 10 million shares, 80% of it is held by institutions. Institutions with deep pockets. And that stock is paid for in cash. You'll get daily fluctuations, but generally you will not see a lot of deep selling unless there's a material event. So if Apple comes out one day and says, hey, you know what, we're not making phones, we're not making electronics, we're going to go and start making cotton candy, then that's a material change that's going to affect earnings, and those institutions will start bailing on the stock. But until then, until, Enron, accounting fraud, that kind of thing, unless there is a material change that will affect earnings, why the heck would you sell the stock? There's no reason. Every month, billions of dollars pour into the market through pension funds, IRAs, all of that stuff. The market is not built to go down, right? So that's why sometimes if you have a penny stock and it's got 3 billion shares in the float, it's never going to move, right? But if you have a penny stock with a 5 million share float, I can manipulate that stock using 2 Schwab accounts, right? So we took the lows of J&K, but no real selling. So much there's still a bid here at 86. Let's go take a look at what I'm seeing. Look at these deals. Look at Nvidia. Last week I said if it holds 200 up, look, 200 to 211, right? Even when we dip below 172, I was like, oh, maybe it'll liquidate. As soon as it reclimbed 172, don't even think about shorting, right? You got rocks in your head. PLTR, here you got inventory selling. It's going to go like this for a while, right? Look at these companies. They liquidate, but they find a bid very, 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 very quickly. Very quickly they find a bid, right? Look at Google. So how do we swing trade these? When you do a look below and fail of, say, 290, you get a little long, and you sell into strength. It's not rocket science. It really isn't rocket science at all. Apple. Use the levels, they work. If you want the levels, come into the room. I'll be happy to show you the levels. I'll be happy to show you how to do this, where you can actually make a living trading. You can actually manage your investments with awareness, so you're not suckered into what they're saying on the financial news. You cannot believe how much you trust the chart. If you trust the chart, it won't steer you wrong, because the chart is actually the transactions that are happening in a market, right? The chart are the transactions. It's a chart of the transactions. The transactions never lie, right? So, yeah, charts don't lie, people do. And we're still kind of going back and forth. You guys have any questions? I'll shut her down pretty early here. I'm still looking for a print in the 82s. Might take a while. I like to trade at an edge. Any questions? Room? Yes, no? Okay. For my coaching students, I think I still need one more day, but I'll start doing sessions again tomorrow. There'll be short sessions, so do your balance zones, get your questions ready, stay out of trouble. I haven't even looked to see what news is coming out today. Thanks, Raj. If you need anything, give me a DM. For the folks who are watching on YouTube, please come check us out at the Trading Syndicate. We have a 3-day, you can check out the room for 3 days. I'll be in there posting charts and analysis, and etc. And I'll be back to taking calls real quick. Thanks everyone for your patience. Much appreciated. Please trade safe, and we will see you later on today. I'll be around right before the market open. Thanks everyone. Much love. Bye for now.